Yeah, there we go. Got the volume going. Hey there, everybody. Chris Franks with Texas West Capital. It is, let's see here, a few minutes after 11 a.m. Central Standard Time on Wednesday, the 20th of January, 2021. In an overcast and somewhat rainy San Antonio, Texas. Hopefully you guys are doing all right out there and trading safe and paying attention. One of the things that we continue to see over and over and over again, especially in the crypto space, and I think it may be even more than normally what we see in equities or forex or whatever, is this emotional tie to what's going on. So traders in Bitcoin tend to be emotionally tied to the idea of price going up. It's this whole idea of, if rather than trying to learn how to trade, it's worse than gambling. They just kind of put money in wherever and hope it goes up. They need it to go up. They need it to reach $1 million so they can be rich, so they can win. The rest of y'all, hopefully, are not doing that, especially if you're coming in here and checking in with me. Hopefully you're, taking the time, whether it's with us or elsewhere, to learn how to trade. I mean, at the end of the day, that's the important thing. Because we all hope that it's going to go up to $1 million or even 100,000. But there's absolutely no guarantee. I don't care what anybody's telling you about network metrics and institutional money coming in and all this stuff. There's absolutely no guarantee that price will reach 100,000 or $1 million, much less 50,000. We hope it will, but we don't trade based on hope, guys, because that's just asking to lose money. If you learn how to trade, then you know what? No matter what the market does, whether it does go up there or not, you can make money. And then and even if the market were to die off, which it still could, guys, it's in its infancy. It's only been around 10 years. It's just now starting to get real mainstream notoriety. There's absolutely nothing in there guaranteeing that it's going to stick around. We've got Yellen coming in, well, potentially coming in. She's Biden's pick for Treasury Secretary. And we know that over at the Fed, which wasn't a fan of cryptocurrencies, and now she's coming in here and she's, making a little ruckus about it. I mean, you guys, there's a lot of people out there that say, oh, nobody can stop Bitcoin, governments can't stop it, saying all this silly stuff. And at the end of the day, sure they can. If they give you enough pain, if you're caught with it, you're not going to do it. And how can they track you? Via, things like Coinbase and other ones. You go, oh, but there's these decentralized exchanges. Yeah, but that doesn't mean that those who created those decentralized exchanges are not going to be held legally liable, especially here in the U.S. Yes, if somebody built and put it out there, guys, somebody's responsible for it, and the law will get that. And so if they get them and and the DEX ends up going down, I mean, what are you going to do? So we all have hopes for it to do well, but we don't just trade on hopes, guys. All right. So hopefully you guys are getting that and not doing that. But anyway, hey there. Let's see. Googly Emil's here. Scott's here. Block Tech. What's going on? Aramis is here as well. I am doing great. Crypto Mowgli, always with the hard to read colors with my old eyes. But good to see you, my friend. Data's checking in. What does that say? Scoob Trading. Hey, what's going on, man? Good to see you checking in. Telluride here. Let's see here. Scoo says January is flying by already. Man, is it flying by any faster than 2020, though? I mean, let's be honest. 2020 seems like it was just a blink of an eye and it was done, right? We had the defining event in March, and since then it just seemed like the rest of the year just kind of flew by. So yeah. January definitely feels like it's doing the same thing. Hey there, Abs. I'm doing well. Hopefully you are too. Let me see here. Let me catch up there. Dr. Crypto, good to see you checking in there. Let's see here. Who else is here? Gian is here. Amber Lee is checking in. Oh, man, you're some of my favorite people there. I need a little white collar that I can don when I'm about to get my preach on. Ah, man, you know what it is, man. Telluride, you've been with us long enough. You know what it is, man. It's always about helping people, rein in their emotion and just understanding, and by me, guys, listen here. By being pointing these things out, that's not saying these things can't happen. Again, I said we're all hoping they can. But there's absolutely nothing going on at the moment. There's absolutely nothing in anything that says price will definitively go up there. That it will definitely go up there. Okay? There's absolutely nothing happening that says it will definitely go up there. And that's the thing. Because there are no definites or guarantees in trading, all right? There aren't. No trade is ever guaranteed. Because price action is going to do what price action is going to do. The market's going to do what it's going to do. The best we can do on the different time frames is use our experience and our knowledge and whatnot to potentially find a good trade that has a greater likelihood of happening than not. Remember, as traders, you want to get out of this mindset that you have to be in the market all the time, that you have to enter every trade because there's just a chance. You want to spend your time finding the opportunities that are more than just a chance. The ones that have a good chance of actually playing out. And those are the ones you want to do. And that means you trade less throughout the year. But that also means you lose less. And that's the important thing. Because even if you're using proper risk management, when you lose, you're still losing. Which means you have to make up that money before you can advance beyond that. Excuse me. And so remember, the idea is that time and compounding are what make you wealthy. They're what, make you rich. But you have to develop a system that you can apply consistently throughout the entire thing that will make sure that you're making more money than you're losing over time. And like I said, then time and compounding allows you to start making larger trades and larger trades, which give you greater returns. And that's where it happens, guys. But it doesn't happen overnight. And I think too many people in these markets right now trying to get rich overnight. And they're going to be hurt really bad if we get this multi-market reversal that I'm looking for. But you know what? Guess what? If it doesn't happen, you're still making money. So everything's bullish. You can still go. You're still making money. This idea that people talk about, and I get this nonsense every so often from people that they're lazy. I have no patience for lazy people, guys. You cannot get to where I am in life by being lazy. And that's lazy in actions and lazy in thought. And so these people are lazy. They read, they read what I write or listen real quick to what I say, but they're not really listening. They're just, hearing it. Excuse me. And they assume that I'm the super bearish person. They assume that, and then they go from that. They not only assume that I'm the super bearish person, but then they go from that and say, well, if you are, then that means you're not necessarily trading. That means you're sitting in cash all this time. That's some of the dumbest logic that I've ever heard. That is just plain lazy thought processes right there, guys. And I'm going to tell you right now, if you're watching it right now and that hurts your feelings, go have your feelings hurt somewhere else. I really don't care, honestly. I don't have a lot of time for that nonsense. I'm too busy. But if that hits you and you go, okay, well, what? Wait a minute. Start thinking. You can discuss major market events potentially happening. And we're talking about, like a 90-year cycle here in the stock market, We're talking about a big reversal, a macro reversal. And those macro reversal, guys, they take time. There's that old adage that the market can stay irrational longer than you can stay liquid. And that's true. So even when you're having these larger macro thoughts, it doesn't mean you have to just sit there. You can still trade the trend of the market. You can still trade in that direction, and you should. But it just means, hey, you've got a bigger idea of what may be happening, what may be going on there. And that's what's important as a trader, guys, okay? So make sure you guys understand that. Like I said, though, if you've read what I've written or listened, or tuned in a little bit here and heard what I've said, and you think I'm some macro or some big time bearish person, and you think that means that I can't possibly that I'm just sitting in cash all this time because of that, then honestly, if you're not going to do anything more than think that silliness, then you can just move on. I really have no love lost for you. All right. So there it is. Hey, listen, that said, if you're interested in really wanting to learn how to trade and how to be profitable and all these things that people don't really teach you, join us at howtotradetowin.com. Right now, you can still get 25% off any of our memberships, any of our packages, guys. So if you're going longer term, if you're looking 6 months or a year, you're already getting a discount on your monthly price. And then you're going to get 25% more off that. So some of the lowest prices we've ever offered. But it's only good through the end of the month, so make sure you're jumping in there and getting involved in that, because we've got a whole bunch of stuff coming up and a whole bunch of new stuff coming up and different ways of doing things, and it's just going to be a great time. Anyway, Tier 3 is where it is, guys. Tier 3 gets you everything. Just 1 month will set you straight for a while, but I think if you do 1 month, you'll probably stick around longer. Most of our members do. Been with us a few years, actually. So anyway, there you go, guys. We'd love to have you in there. Join us, all right? By the way, we've got somebody working on an automated system now for memberships that will integrate Discord with our payment system. And so that should be available within the next week or two. So you guys that are members, you're going to notice that, and it's going to be pretty great. So anyway, that's coming up too. Let me see here. Who else is here real quick before we get talking here? Let me see. Nevlusian, what's going on? Silvio checking in, says Biden live. Yeah, Biden checking in today, guys. Market's doing a little snap up on that Biden inauguration. But things are rarely as easy as people make you, might make you think they are. So this idea that Biden's in, so everything's going to be easy now, I think is a big misnomer, and I think it's going to catch a lot of people off guard. Let me see here. Red isn't good for me either. No wonder I don't like green and red candles. Let me see here. Block Tech, what's going on? Let me see here. River Rap, what's going on? Says, are you worried about Biden? Nah, I'm not worried about Biden. What do you mean? Just that he's going to unleash easy money or whatever? I mean, at the end of the day, guys, one of the things I've tried to get across to y'all is that when it comes to this money printing and whatnot, first of all, it doesn't happen the way you think it does. And so maybe we might talk about that for a minute here today if we've got time. But beyond that, even if there is money being printed out there, it has to actually get spent. And if people are worried about the economy, if people are worried about what's happening with things, they're going to use that money to either pay down debt, which is not what we need. If you've got a debt-based economic system, you have to have credit expansion. That way you're paying off debt with cheaper dollars. If you have credit contraction where people are paying off their debt and people are taking out less loans and whatever, people, businesses, whatnot, then that's credit contraction. That credit contraction is actually very, very harmful to a debt-based society because that means that you are paying your debt with more expensive dollars. And that doesn't work. The only reason debt-based works is because you're paying off your debt with cheaper dollars. It becomes very burdensome, overly so, when you have to pay back your debt with more expensive dollars. Because you're paying more to get those dollars to service that debt. And so that's a big thing when you think about large countries. I mean, forget just thinking about people, think about countries. This is where it's really important. Because if the value of the dollar is rising, that means that they have to pay off all that U.S. debt, which, by the way, I think rose like $12 trillion last year. The U.S. debt, people have more appetite for U.S. debt than anywhere else in the world. And so all that debt, that $12 billion in debt that people have taken on from the U.S., countries have, when the value of the dollar goes up, they have to pay more to service that debt because that debt requires that they pay it in U.S. dollars. They can't just pay it in whatever their currency is. And, the Fed tries to do things like open up swap lines and whatnot, but at the end of the day, especially the emerging economies, they call them now. Back when I was younger, they used to call them third world countries. But they're the ones that are especially susceptible. And why is that a big deal? Because guess what? If they start defaulting on their debt to the U.S., that debt, what does it do? It gets written off, basically, right? And when things get written off, that lowers the price. That lowers the value of things. And so that I don't want to say a deflationary effect on prices because deflation and inflation are rises, are declines and rises in the amount of dollars available. But in the price itself, it leads to a decrease in prices. And again, that's not what what the debt-based economies want to see to continue on. So. Anyway, that's a lot of that going on there. Block Tech, yeah, I already said hi to these. So, yeah, I'm not really worried about Biden. He's going to do whatever he's going to do. but it really comes down to, what do the people believe? How do people feel? If they are concerned about the economy, if they're concerned about where things are going, which they should be, because jobs keep dropping off. People keep losing jobs. And again, it's not just any jobs. It's these higher value white-collar jobs, the ones that would create extra spendable cash that would go in, and these people that could then take out more loans and whatnot. And they're the ones who are losing their jobs. So that gives you a big consistent worry there with things that are going on. Oh man, these idiots always with their got to block them all with their, you want to be famous? I don't want to be famous. I'm not worried about that. Common Man, what's going on? He says, could be wrong, but my gut is telling me people are a little nervous until they see what happens today. And then the Dow will go up a lot and Bitcoin will go up a lot. Why would it go up a lot? Any particular reason? I mean, it's possible. I'm just curious why you think it's going to go up. Let me see here. Horst Thorst, what's going on? It says, do you think Trump would have been better for Bitcoin's price? I think that people put too much emphasis on presidents for asset valuations, for asset pricing. I don't believe that they have that much of a significant impact on it. Like I said, I believe anything that happens and all that's all short term. Everything, again, the basis of the way I trade is that everything works in cycles. And basically the cycles are based on socioeconomic activity, socioeconomic beliefs and thoughts and whatnot. How do people feel, right, as that moves through it. And so to me, that's what does it, and so we tend to find, people say, oh, but look, when so-and-so did this, then this happened with price. Well, price movement and news events happen all the time. We just concentrate on the ones that happen when something significant happens and we're paying attention. But if you go and apply equally all this, you'll find out there's no real correlation between it, or causation, I guess, between it. So yeah. Hey, what's going on, Hank? Perma beard? Yeah, I know, right? I got to get this thing trimmed up a bit. It's getting kind of crazy here. What's going on, bud, man? Wazobia, what's up? Checking in from Nigeria. Hey, I'd love to have you here. Thank you so much for checking in. Spiral Architects here as well. Let me see here. Common Man, I don't look at stocks here on Wednesdays. Look at them on Fridays. So if you still want me to look on that Friday, be sure to check in and let me know. I think as far as stocks go, I think here's the thing, guys. Everybody's concerned that if we go into a depressive kind of condition economically, then the stock market drops. That means that everything's dropping, and that isn't really the way it is. There's always sectors that still work out. Most often, in just about any type of recession or pullback or whatever that we have like that, healthcare usually does decently because, everybody still has to have healthcare. So that's one of those things that they pay on. Staples, consumer staples, things that they buy regardless of what's going on, those do okay usually as well. And then sometimes, depending on the type of recession that's in there, you might have one industry or a sector that's booming during that time. Everything doesn't necessarily drop altogether with it. There are going to be some companies and some sectors that might shine through there. So yeah. It is the U.S. that has a huge deficit, and developing countries generally do not get loans from the U.S. Not sure where you get that idea. We'll talk about that another time, Hank. It's out there, though. With what's going on. The appetite for U.S. debt, like I said, is higher than any other country. Over globally. And it's significantly higher globally. Like I said, last year alone, countries added $12 trillion of U.S. Debt to their balance sheets. $12 trillion last year, guys. 1 year. It's quite a bit. Let me see here. Hey there, Baker. Good to see you. Google Memo says, I get the deflation argument, but I heard lots of big folks on Real Vision arguing for the opposite. What do you think shall happen to not get into a deflationary environment? Well, if you're not going to get into deflation, what you need is people spending money. You need credit. To put it simply, you need credit expansion. You need people taking out loans and not paying off their loans that they have. But the exact opposite has happened all in the last year. We've seen a significant contraction, especially with companies, with industries. And we know that people are paying off their loans. And they're not taking out no. And we know that banks are making it more difficult for people to get loans because the banks are concerned about the economy. And they don't want to be left holding the bag. So we know all these things are happening. And the only way that you're going to get any kind of economic expansion is through credit expansion. It's not going to happen any other way. I mean, that's the long and short of it right there. So as long as people continue to pay off debt and companies continue to pay off debt, as long as they don't continue to take out loans, to create new dollars there, that's going to be. And so if you have that and then you have deflation on top of it, where the value of the dollar is more, I mean, that creates that whole deflationary spiral thing that we talked about. So, yeah. Let me see here. Long Range Crypto What's Up says Yellen is a Bitcoin hater. Yellen, yeah. Again, the stupidest argument. I think Yellen said, because there was an article out there that quoted Yellen as saying, I think cryptos are used significantly for terrorist financing. So we need to do something about it. And I'm like, how stupid is that? These are it goes to show you that even people in these high positions of power still don't think and speak logically. This person doesn't say, hey, the facts say this is what's going on. They say, well, I think they're being used for that. And so since I think that, then we need to do something about it. And you need to be fearful of that, guys, because as much as your farm animals and anonymous Twitter accounts want you to believe that crypto can't be killed, it absolutely can. And all governments have to do is cut off significant on-ramps and on-ramps, which people like Coinbase and others who are regulated by the state are going to abide by state law because they don't want to get in trouble. They don't want to lose their license. And so maybe you don't kill it off completely worldwide, but you put a chokehold on that liquidity, and guess what? There's no growth. Where's it going to grow? How are you going to get to 50 or 100 or 100,000, 500,000, a million if you don't have your big institutional investors coming in? Do you really think there's that many retail out there that are going to keep holding it up? No. Guys, I keep telling you, retail gets into it generally because it's a prices. They think that, hey, if they can get in now, then somebody else is going to buy from, more expensively later. And they're going to realize profit in terms of dollars or whatever the currency is. That's the big, the big secret that goes on that isn't really a secret, but people tend to ignore. So, yeah. Hey there. I am really not even sure how to pronounce the first part of that. Wolf? We'll just call you Wolf Music. But yeah. So, anyway, here we go. So, what's going on with Bitcoin? Still, we've got this potential triangle playing out, all right? This is still, hey, what's going on, TV Canal? Good to see you. And T-Ball 5. So we've still potentially got a triangle. Now, the thing I've done consistently with our Discord members is helped them keep a rational head and understand that just because it looks like a triangle at the moment does not necessarily mean it's going to be a triangle at the end of the day. More times than I care to remember and talk about right now, we've seen Bitcoin do this similar thing here only to break down. And not be a triangle, actually just be an ABC or a 1, 2, 3. So this is still the possibility. But right now, because it is possible that we've got a triangle going on, that means price is likely printing wave C if the triangle is valid, okay? Or if it's correct, not if it's valid. It is valid right now, potentially. It's not correct. It may not be correct. So our initial target here is this 4-hour demand structure right here, EQ, at right around, I've actually got these written down. Let me see so I don't have to try and measure them. Right around 32,560 here. That's the EQ of this supply structure right here. And if price continues down below that, then you're looking at this, something that we've had here for a while, this 4-hour supplies or demand structure EQ down here at about 30,000, let me see here, 30,790 right here, right above the 4-hour S1 pivot. If you're going down below wave A here, guess what? That's no longer a triangle. And at that point, we're looking at a minimum move down here, potentially toward 28,271. That would give us this ABC kind of thing going on here. You know, if you go out here, you measure wave A, or what we believe may be wave A here, and you bring it up there to wave B. I'm just kind of grabbing this real quick, so maybe a little bit off. But generally, that wave C is going to equal the wave A right here around 28,271. And so that doesn't mean that that's where price has to end, but when we look at zigzags, simple zigzags like that, ABC corrections, a common relationship is that wave A and wave C are equal in length. So that's why we look there. But guess what, guys? If you're losing wave 4 here, all of a sudden, it could still be a wave C, but all of a sudden, you're potentially looking at a 1, 2, 3. And before you say, oh, that can't happen, slap yourself. Right here, so you're looking at potentially 1.68, so, maybe a 3 down here at around 21,000 almost, and then you're getting 16.5 here for your 5. And that just becomes potentially A. And you say, oh, that can't happen, that can't happen. Well, it can. I'm not saying it's going to right now. I'm saying if we're losing this 12 or 28,271 here, and really just this swing low here is what I'm talking about, this 27,678. If we're losing that, that becomes more and more possible, more and more likely. I mean, if we look here at this range, the target based on the height of the range there, on the breakdown of that range support, the range lows there, is right here at 18,158, which gets you right around the EQ of this demand structure here, right in this high volume node area. So there's a lot of reason why a breakdown of the swing low here not only invalidates the triangle, but potentially sends price much lower. And what would flip, crypto Twitter on its ear? Well, if price were to do that, right? Crypto Twitter, everybody believes this is a triangle and we're going up. And like I said, while it might be, it's not guaranteed to be so. So they continue to sit here and everybody's telling buy the dip, buy the dip, buy the dip. Oh, look, Ethereum made a new all-time high. Buy the dip, buy the dip. What if that ends up not working? So you can't just listen to people who are doing that kind of thing out there, guys. You absolutely have to learn how to trade, which means there's a big emphasis. Most of your emphasis should be on risk management. So, I mean, this is kind of what we're looking for here. We've got the breakdown here below the 4-hour pivot, below the local swing low here. And what's really important is what I told Discord, our members in Discord, was that, if you take everything else and you're just looking at pivots, then a loss of pivot support usually has price targeting the next pivot down. I said, however, there's a lot of support in this area, as you can see these swing lows here and resistance here. And I said, so we need to see actually not just below the pivot, but a breakdown below the swing low here, which is 33,850 here on Coinbase, to really kind of say, okay, I think we may be heading actually toward the S1 at least. So, I mean, if I'm just looking at pivots and everything else out of the way, I mean, I'm looking down here toward the S1 pivot right now. As long as price pushes up here, gets rejected the pivot, and then makes a new local low here below 33,387, I'm expecting, that S1 pivot area. That just happens to align with potential, again, a potential triangle low there as well. But, I mean, if we go here, we go, okay, well, if we say this is A and this is B, and we have a C here, I mean, at basically 31,580 or so, just at the top of this demand structure, wave C will be equal to wave A. So again, this demand structure makes a lot of sense. But if you lose it, you start moving out further. Let me see. Let me catch up with you guys here. Let's see here. Wolf Music says, I got a stop loss at 34,400. I'm going to buy back at 32,000 possibly. All right. Tudor says, hey there, how you doing? Says, triangle can break both ways though. Yeah. Depending on what triangle you're talking about. I'm talking about an Elliott Wave triangle. I have little use for pattern triangles that just look like they might be triangles. That's too much subjectiveness. Elliott Wave triangles have definitiveness. They're ABCs for, they're ABC waves for A, B, C, D, E. They're 5 waves contracting of ABCs. So there's a definitiveness to that type of triangle. And that type of triangle is actually a continuation. It's the move before the final move. So if this triangle plays out, you should have a thrust or a move up out of it. And that should be your wave 5. Now, whether that's wave 5 of 3 or wave 5 of 5, we'll find out if that happens. But nonetheless, it means that move up is going to be your last move, and then you're going to have some sort of larger correction. If it breaks down from what appears to be a triangle here, just looking at it, again, that because like you said, if you just got those pattern triangles out there just because they look, you got converging lines, yeah, price can go either way on it. And there's not as much definitiveness there. It's a lot more risky trade to take, even a breakdown or a breakout, because you may, if you're just looking at, it looks like a triangle, well, you could do that right here, right? Let's say this right here. This looks like a triangle, right? And you say, look, there's a breakdown, so we're going down now. And you go, you're going to, because you look at the height of the triangle, and you get it on there, and you take it to the point of breakdown. You go, oh, man, yeah, look at that. That's the target, right? Which, by the way, is actually not a bad target. It's getting you right here around this higher volume node, right? But, you look at it, you go, okay, yeah. But if this is an Elliott Wave triangle, this may actually be it. And you don't know. So you're holding as it goes down here. It bounces, and you think, it's just a little rally, a dead cat bounce. It's going to continue lower, so you don't sell. Goes up, goes up, goes up. Next thing you know, it's back up here, and you'll be lucky if you break even. Most people who trade are going to get out of it at a loss because they're going to keep thinking, it's got to go down lower. And then psychologically, they're thinking, emotionally, they're thinking, man, I just lost all this. I should have locked it in down there. Please, God, please, if you let it go down further, if you let it go back down again, I promise I'll lock in profits this time. This is what people go through. It's this back and forth in their head. And what they end up doing is it goes up there and continues up because the triangle is actually this here. And so then they take a loss there, and then it gets above this swing high, and so then they buy into it, they go long, and then it hits up here, and guess what? Makes wave D, comes back, they get out at a loss again. And then it comes down here for wave E, and then it pops up, and then they're unsure, and they don't do anything. So yeah, I always look, when I talk about triangles, I'm always talking about Elliott Wave triangles because there is a definitiveness. There are rules for it. Anything else, is too risky. It's too much of a chance that you're going to be wrong if you're playing it as a triangle. Yeah. But yeah, definitely a valid point. Triangles, if they're just patterns, if they just look like I showed it there, like triangles, they can break either way. But if it's an Elliott Wave triangle, it's going to break in the direction of a continuation of the trend. And it's the next to the last move. It's a wave 4 or a wave B. So after you have wave 5 or wave C, or it's X, so you have wave Y after it. It's always the next to the last move. Yeah. How big of an impact do you think, if any, if Yellen passes the taxing of unrealized capital gains? Oh, man. If you're going to tax I think that's one of the dumbest things to do. To tax unrealized, because you haven't actually made anything. You haven't locked it in. I think if I don't think that's going to happen, because I just think it's such a poor move. It's just an awful move. It makes no sense. But if it did happen, I think it would have a significant impact on crypto. For U.S. Because the U.S. is a big part of the whole crypto thing. A lot of money is flowing in from the U.S. And I'll tell you what, your big traders, they are not going to be in here playing this game if they're going to have to get taxed on unrealized capital gains. They'll stick to some that they know that's easier on the taxing and whatnot. We all know if you've had to file taxes in the U.S. with crypto, you know how notoriously a pain in the butt it is. So yeah, that would be a huge discouragement for large players, I believe. Hank says he's comfortably short, or maybe he means he's wearing shorts comfortably. He's comfortable in his shorts. I don't know. Yeah, exactly. Tell you right. And then you got to look about this, the long-term capital gains tax rate or trades in Roth IRAs. Yeah, exactly. We'd have to see how all that plays out for sure. Ellipsis, how are you doing? Good to see you here. Bitcoin ruining the alt season. Dang it. Yeah. Hank says technically USDT is an alt too. He's not wrong. He's not wrong. Stablecoins are still alts, right? Let me see here. Do I think Bitcoin can hit 80,000 by December? Oh yeah, I think anything's possible. The question is, will it? I don't know. I think if you want to think that, I think we need to get a much better look at what happens here in the short term. We have to see, first of all, is this the top and it's headed down here? We have to see if this is not the top, do we have a triangle and a top here? And then is that wave 5 of 3 or 5 of 5, which we'll be able to figure out on the decline there. So, I mean, I think, if you're thinking 80,000 by December, I think you've got a few months out here to watch price action to kind of get a better idea of that. I mean, it's possible. Anything's possible. I don't know how likely it is at the moment, though. And I think that's a big, a big hindrance for new traders is they're always thinking about those big, lofty pie in the sky numbers. They're always thinking, man, when they get in, you get in wherever you get in and you envision exiting at hundreds of $1,000s or millions of dollars, right? And it's hard not to, we're emotional beings. It's hard not to, but that causes a lot of issues if you're trying to actually make money. Because if you buy now looking for that payout without any understanding of what's going on, you're not even gambling. I think it's worse than gambling. So, yeah, it's crazy. Let me see here. Hank says, no, I'm comfortably short since 39K. No shorts. Okay. Let me see here. We can talk about Litecoin there on Friday. Just right now, generally see it moving with everything else. Potentially has one more final move up. I think that's kind of where we are on all the majors, more or less. Other than XRP, which looks like, it's got a little bit further downside before it heads up. But that's more like a wave 2 potentially. Again, we'll have to see how things continue to play out. As of today, I believe, Coinbase has suspended all trading of XRP. Though they said you can still deposit and withdraw, you just can't trade it with them. So, again, we'll see how all that ends up playing out at the end of the day. Playing with XRP right now, I think is a very risky trade. I think there's a lot better places for you to put your money right now. Just because, and to me, it's not even, like I said before, it's not even the whole lawsuit. It's the exchange responses, the large exchanges cutting off the trading. That to me is the bigger problem there. Yeah. Hey there, AC. Good to see you. Wolf Music says, yeah, most YouTubers strike that 80,000 number into your head. It makes most people emotional when it drops 5,000 exactly. Yeah, exactly. That's one thing, guys, I've always tried not to do. I've always tried to keep y'all level-headed much more than, to try to help you out with the emotions. Because, again, guys, at the end of the day, most traders aren't that bad. They can kind of decipher trends without much help. They can kind of understand if we're an up or a down trend. Most traders can. But it's that emotional side of it that makes it difficult to actually make money with that. They end up getting in or out of trades that they shouldn't be in because, again, of their emotion telling them, oh, this or that. Yeah. So, yeah, it's kind of crazy when you're looking at that as far as traders go and whatnot. But it's always your emotion, guys, as traders. It's always your emotion that's your biggest adversary out there. It's not somebody else out there telling you things. It's not the market itself. It's your emotion. Your emotion usually is what results in your largest losses. So that's why we always talk about it. And I have never once, and I'm sorry if anybody's actually thought this, but I've never said that it's easy to deal with it. It's not easy to deal with. It's very difficult to deal with your emotions. to get them to change with something like that. So yeah. Let me see here. Yeah, Litecoin and all alts basically going to drop harder when Bitcoin dumps. Sure. Again, Bitcoin's the king. So if Bitcoin's moving up, they generally move up more. If Bitcoin's moving down, they generally move down more. Yeah, for sure. Let me see here. Thank God XRP was robbing Smucks. I don't know. That's been one of my biggest trades in my life. I don't know if you've followed me for any length of time, but that's the one I bought at like 66 100ths of a cent and sold, God, I think on average it was right around 270, 275, somewhere right around there. Didn't get the top. Didn't need to. I mean, that was an 8-month profit right there, guys. From almost from just over half a cent to, almost $2.03, almost. So, made a stupid amount of money with that. Even when everybody's like, oh, it's the banker's coin. Oh, and they talk all that smack about it. Stop listening to people and what their personal opinions are, their emotional opinions are about things. You guys need to not do that. Just trade what's tradable. Make your money, move on. Don't get married to anything. What concerns me right now is I see a lot of traders becoming married to the projects again, kind of like what they did in 2017 with the ICOs and all the new ones coming out. Oh, this one's going to kill Bitcoin or kill Ethereum, or this one's going to revolutionize everything, or this one's going to do this and that. The team's so great. Oh man, look at what they're doing. Look at their roadmap, and they all pretty much sank to ridiculous lows. So many of them died off. But you're getting the same thing right now. Everybody talking about the same thing with the alts right now. I keep telling you guys, I don't believe in this idea of fundamentals right now really matter, company fundamentals. I think the only fundamental that still matters today is whether or not Bitcoin is moving up or moving down consistently. If it's moving up, rising tide, raises all ships. If it's moving down, should take them down in general. Now, you've always got your outliers that work regardless. After 2018, there was, or during 2018, that's when BNB was really kind of rocketing up while Bitcoin was dropping, right? And then in 2019, I believe it was, we had Link, right? So there's always going to be those that kind of do the opposite. But in general, and prior to that, it used to be Dash and Monero and whatnot. If you guys followed me way back in 2017, I have to think about it. We talked about that relationship a lot. But, things change as it moves through there. At the end of the day, it's what is Bitcoin doing? What is concerning more than anything right now is that alts in general are still lagging seriously, even though Bitcoin has doubled its all-time high. That's concerning. But we'll see. We'll see if it continues. Let's see here. Hank said his XRP was one of his, or his best trade as well. He said still paying the bills 3 years later. Yeah, IOTA was a stupid one in ADA. Life was simple there. And it was. Everybody's a genius in a bull market, guys. It's the ability to see the possibilities right now, locally right now with this right here, that really kind of sets you apart from other people. Do you emotionally believe price has to go up no matter what, or do you see these possibilities that could lead it lower? Because understanding that difference there could mean many thousands or tens of thousands of dollars in profitable difference. The same way, with noting that 2018 was a top, or 2017 was a top of some sort. These kind of things, or 2019 was a top, or, March was a bottom, was a low, and you could buy that bounce there. I mean, understanding these things could mean the difference in a significant bit of profit or not. But, it's not that you can't, guys. I firmly believe, I don't think there's anybody out there that can't learn how to trade. I really don't. But it's the willingness to be able to put in the work required, guys. You can't expect it just to happen for you. You can't expect somebody else to do the work for you. It just doesn't work that way. So you should, zoom in and start learning how the market works. But learn the big things. Learn, don't pair it. If you don't know macroeconomics, Don't parrot the money goes burr kind of meme. Don't do it. Because you have no idea what you're talking about. Even if you're right, you still don't know what you're talking about. You see what I'm saying? And I think that's the best way to live life. Again, as always, guys, I talk about living life the same way that you trade. And that the better you live life, the more responsibly and the more logically you live life, the better results you're going to have as a trader. I'm a firm believer in that. Sure. Let's see here. Paul, what's going on, man? What's my opinion about Ethereum for the long term? I mean, as long as Bitcoin's going up, Ethereum should do really well. I don't have an issue with Ethereum at all. But Bitcoin has to continue going up. Is Ethereum going to go and make all these ridiculous new highs if Bitcoin's going down? No. Again, I don't think that's really going to happen with any of them. I mean, again, you have some sometimes that come out there and do the opposite, but in general, if Bitcoin's going down, everybody else should be following with it. Yeah. Let me see here. TV Canal's mentioning this bullish. Actually, it's not hidden. It's bullish divergence here. And actually right here as well. So you've got it locally right here. You've got this bullish divergence. And you've also got it right here. On the 1 hour here. You've got a slightly lower low here. Moving up. Now, if you're looking at that, the one thing you want to watch is this pivot area. And so again, moving above that pivot, I think price has to reclaim, on the 1 hour or 4 hour, especially above this swing high here, which is 35,951.71 cents on Coinbase. I don't think it's enough just to get above the pivot here. I think you've got to cleanly get above, impulsively, above this swing high up here. Otherwise, you could just look at, something like this and then right back down, as it plays out there. Let me see here. I mean, you could look at this potentially as being a 1, 2, 3, 4, 5 maybe. I think we'd have to zoom in more. Let me see the 15-minute here. Let's see. See, normally I'd want to go 1, 2, but if that's 1, 2, then this has to be a 1, 2, 3, 4, and 4 overlaps 1, which isn't what you do, which isn't what's allowed, if you've got a wave 3. Wave 3 can't have that overlap. So you'd have to look at this as potentially being a 1, then a 2. And you might be able to go a 3, a 4, and then a 5 as a diagonal. Let me make sure here. If this is 1, 2, and this is 3, 4, this just can't be the shortest. Right here. It's shorter. Let me see here. See, it's the shortest. So this doesn't even work. This doesn't work as a 1 here and a 2, a 3, and a 4. So, there's you'd have to kind of dig into how this is going in here to kind of figure out what may be going on. I like the wick at the bottom. You've got this great wick on the 15-minute here with this great volume. But as you can see here, Stochastic RSI is up here and overbought now. Right now, you've got a slight... let me go put these back on the 1 hour here real quick. Let me get this one done. Because if we look here on the 15-minute, right now we've got a slight bearish divergence here. We've got higher highs on the oscillator, and you've got lower highs here on price. And so, if you're looking at that, I mean, you could maybe make an argument that here's an A and a B, and then you've got a 1, 2, 3, 4, 5 for C. So you get your A, B, C there and coming back lower. As we look at that, let me see here. I can't even, I'm sorry that. We'll just call you Universo. It looks like Insolito Universo. Says, being pregnant is having a great influence on my results. My emotions are downsized by risk management all of a sudden. Man, I'll tell you what, maybe that's the key there to trading. And, women would go get pregnant so that their risk management becomes easy. And then they outtrade all the men and the women end up running the world. Oh, wait, the women do run the world. Guys, if you think men run the world, you're not very smart. The women, they are what run the world. We are merely their puppets along the way. Oh, man. But I love that. That's an interesting thing there. I love that it's having such a good result on your risk management. That's what's awesome. So good stuff. Let me see here. Mohan, is that how you pronounce your name? I hope so. Good to see you checking in. Let me see here. Just kind of catch up with you guys here. Common Man says, until we break that downward facing resistance, I'm nervous about going long. We've been rejected from it several times. And here's the one thing, guys. That's the big, again, one of the big things that happens with new traders is they're always trying to get in at the absolute bottom, lowest price, or get out at the absolute highest price. The real way you win as a trader, guys, that's not that. Thinking about that's just going to get you losing money. If you can lock in some profit here, and you can lock in some profit here, and here, and you can lock in some profit here, maybe here, again in here. I mean, that's what you're doing. You're looking for the trading opportunities that have a really good chance of winning out. You're not entering a trade just because there's a chance. You're entering a trade because there's an outsized chance that it's going to be profitable. You're looking for your higher confidence trades. Okay? If you can do that, as new traders, you have to get out of this absolute mindset. You don't need to be a great trader. You don't need to short here, long here, short here, long here, short here, long here. No, actually, in trying to do that is going to lose you a lot more money than you'll ever make. To be a good, consistent, profitable trader, short somewhere in here, lock in profit. Long somewhere in here, lock in profit. Long somewhere in here, lock in some profit. Short somewhere in here or somewhere in here, lock in that profit. It's consistently locking in profit. Remember, if you can consistently lock in profit and at the same time have your good risk management so you're not losing more than 1 or 2% of your trade or of your capital in any single trade, then time and compounding is going to take care of the rest. But you have to consistently lock in profit in order for time and compounding to work. As long as you continue to hold out for further more and more profit on that single trade, you're going to lose money. Here's the thing, guys. Think of it this way. Sorry, give me a minute here. I got to go in a minute, but think about this. If you, not necessarily the top, just anywhere up here, if you short and you lock in profit, we'll say right here. So you lock that in. Maybe on this wick here, right? And then it goes back up, and then it comes back down, and it goes below that wick. So you go short again in this next wick here, maybe. And you lock in some of this here. You haven't, you didn't go short up here and get all this. You missed all this. All you did was lock in that, and then you lock in a little bit more here. Now what happens? That is actually a more profitable set of trades than just shorting here and holding down. Because one, price may not continue down further. It may bounce here and head back up. Go to new highs. We don't know at the time, right? Two, you have your trade, you enter the same size on both trades right here. But then in the first example there, you have a second trade which you can now use with a larger position size because you have more capital now. So now you make more profit in this way here. And you're not potentially losing out. Again, it's a trade-off between how much risk you're willing to take and the profit that you need to look at. But if you can consistently lock in profit, guys, time and compounding does the rest for you. As long as you've got proper risk management. So yeah. Oh my God. I'm going to get rid of this person. Put them on timeout there. Because it's absolutely silliness. Guys, don't come in here acting like idiots and blocking up the trade, the chat like that. If you do something like that, I'll put you in a timeout. But if you do it again, I'll just block you. I'm not going to play this silliness. I'm too damn old. Seriously. Sorry I didn't notice it earlier there, guys. But anyway, yeah. Telluride says, when I claim I'm the head of the family, my wife reminds me that she is the neck. I love that. Anyway, there. Hey there, David. Good to see you checking in from California. Can I say hi to you, Moon Angel? Hi. I don't know that that's all that special. I'm nobody. I'm just a guy that does a thing. But I said hi. There you go. Block Moon Angel? Well, I didn't see them do anything. I guess I must have missed it somewhere. I don't see that they did anything. I can too now. I had to put in a timeout. Man, I must have missed Moon Angel there. Ari, good to see you. Killer, what's going on? Yeah, so anyway, that's what we're kind of looking at it, guys. I can't take a look at the dot chart today. Today's just Bitcoin Friday. I can take a look at it. Or, guys, always, if you want to join in, if you join Tier 3 right now, you can get in. It's at 25% off. Whether it's a month or, whatever package you want to get on that. And you can come in and request whatever you want. And I'll get those requests for you. That's Tier 3, so we do that, every day. Lots of great opportunities there as well with those. So, anyway, this is kind of what we're looking at, guys. So the question is, do we continue up and impulsively close above this pivot and then continue? Or do we potentially get above the pivot, get rejected, and pop back down? Or do we just get rejected at the pivot? That's what we're looking at. 4 hour has, the 4 hour, we haven't actually, if you look at this locally here, high, low, lower high, lower low. This is a downtrend since the 14th, so almost a week now. And it hasn't hit oversold yet. So, there's a lot of room for it to continually head lower. And right now, the local direction is negative. Stochastic RSI on the 4 hour is also not bottomed out. So those two things suggest we could have further downside. They don't guarantee it, but they do suggest that we could have further downside. So then if we zoom into a shorter time frame, like the hourly here, and we note that Stochastic RSI is up and overbought here, it says, okay, well, maybe we're going to get, a reversal up in this area rather than continuing higher. Again, zoom in a little bit more to the 15-minute. 15-minute, we're up more, but again, could still have some higher up there before it gets back. If we get above that 4 hour pivot, I'm interested in this 15-minute pivot up here, really. Right there at around 36,580. But yeah, I would be definitely more interested in that pivot up there. If we move impulsively above the pivot and get above this swing high, that's that swing high still right there around 35,810. So, again, guys, the whole idea here is to be patient. I know a lot of you are like, oh, but I'm not making any money and the world's leaving me by and I'm scared I'm going to miss out and all these things. But the key to being a successful trader, guys, is just locking in profits consistently. It's not getting in at the absolute lowest price or getting out at the absolute highest price. And if you try and do that, the odds are that you are going to lose a lot of money rather than make money. You're going to do what you need to do. You're going to argue with me about it. I know I argued when I was first learning to trade. But time. If you are fortunate enough to somehow be able to stick it through all the learning pains, the growing pains at first, then time will give you experience and it'll show you these things that I'm saying are correct. I can't force you to believe it. You can lead a horse to water, you can't make them drink, right? So, just some things to think about there, guys. Stop watching the 15-minute, especially if you're a new trader. Stop watching the 15-minute trying to catch this right here or this up here. All right? Zoom out a little bit and look for a better confirmation on at least the 1 hour. Preferably, and the newer you are, the higher time frame, that you should be trading. If you're brand new, you should be trading the 4 hour or the daily. No lower than the 4 hour. Because these bigger time frames have less noise, all that up and down, overlapping price action. So there's more forgiving. So just some things to think about with all that, guys. All right. So that's where we're at. Let me see here. This is urgent. There's RSI divergence on the 1-minute chart indicating Bitcoin could break above 35 and maybe pop to 35.2 or something. Yeah, guys, I mean, really, the best thing that I do here day in and day out is help bring you back to reality. Whether you're willing to listen at this time or not, that's on you. But I'm going to tell you, I've been doing this, guys. Listen, a lot of people that get out there and they give people like Peter Brandt a hard time. Or me even. But the fact of the matter is you can't be in the market as long as we've been in it and be doing it wrong. You absolutely have to get rid of your ego, get your head out of your rear end. Seriously. If somebody is doing a thing successfully for a long period of time, you should be seeking to learn what they know. Because they've spent all that time doing it. For me, it's been about 25 years. For Brandt, it's been over 40 years. And what do we always come to the conclusion of? That there are no guarantees. That risk management is the absolute most important thing you're going to do every day as a trader. The two things that new traders want to ignore and don't want to pay attention to. Right? Let me see here. Before I go, let me see. Where's this support line coming at? So this is interesting right here, right? Let me get this point down here. This 4th of January, 11th of January, and then today. So I think, it's possible if you're breaking down from that, you're heading down. But, maybe this is an ABC in here. Maybe this just becomes a real short wave C of C. And so it is possible, that you get this A down here, B up here, C, D and E kind of thing. But my idea, my thought though, guys, is that if this is a triangle and if it does play out as one, I think E is likely going to be right around this 4-hour pivot area, maybe right above it. And so you're looking for, $11,900 target from where wave E ends, if it's a triangle. So that's what I'm thinking is most important about this whole triangle thing here. But if you're getting this breakdown below here, again, if you're going to break down below here, we've got our targets set here, but I think, you've got basically just about 3 touches here on this line. Whoops. Make it more correct. There we go. Yeah, so we've got 3 touches on this line. Remember, one touch is a point, two touches is a line, 3 touches is a trend line. And so if you break down a trend which has had 3 touches, it's usually indicative of heading down, right? And so something quick and easy we can do is, okay, we can measure out from the bottom of this here to the top, to the swing high there. And if you want a quick target on that, you can say that if you have a breakdown of this trend, it's possible that you might have a target of about $12,900 below the point of breakdown. And this is a significant area. It gets you right above this this kind of demand structure down here, larger time frame demand structure. So yeah, again, just something else to think about. If you want to look at this as a triangle, again, we talked about triangles and just regular triangle patterns and whatnot. I mean, if you're looking at that, the correct way you'd find your pattern-based target is just what I did. You take it from the peak to the support. And you just put that at the point of breakdown, wherever that breakdown comes in. And you get that 12,900 target. So just another way to look at a possible target based on this trend line right here that's rising, if you get a breakdown of that trend line. But, again, guys, absolutely nothing is guaranteed. So risk management remains the most important thing that you're going to do. This line right here, extended back. See here to November 17th. Let's see here. Oops, where's November 17th? 2nd. That's 26th. November 17th? I don't know. This is, that would be right here. You know, that would be, oh, this one right here. Let me see here. I mean, yeah, it's a general area of support or resistance, maybe. You know, I guess something to watch. I'm more interested in the exactness of the line where it sits up here locally. You know, because there are 3 touches on that line that makes it a trend. So if you get a breakdown of the trend, you should be looking lower. It should denote a change in where you're headed here. So yeah. But anyway, you've had that line for like 2 months. Yeah, I mean it's a good. It looks like a pretty good area of a general area of support resistance there. So a breakdown, a conclusive impulsive breakdown of that area, I think would definitely look at much lower. But again, crypto Twitter is all looking at this triangle here. It may play out. We've talked about the possibilities here. But they're not ready for the possibility, seriously considering the possibility that we may get these mid or low 20s or even lower. And so you guys are now. Whether you want to believe it or not, you're at least aware that it's a possibility. And now we just need to watch what happens, right? Anyway, I'm going to get out of here, guys. God, I keep running so late here. It's about 15 after 12. I'm going to get out of here. Those of you that are in Tier 3, don't forget, here in about 4 hours, 3 hours and 45 minutes, we're going to have our live training. We'll have another technique for you guys today. Make you guys a ridiculous amount of money, as always. So be sure you guys tune in for that, or if you can't, of course, you get the recorded stream there. If you're not with us yet, we'd love to have you join us over here at howtotradetowin.com. Like I said, right now you get 25% off. Go for that Tier 3, get it in, do it at least a month. But, again, once you use the 25%, it's done. So if you do it a month, you go, wow, I really like this, you're going to have to pay full price. If you do 3 months or 6 months or a year, you're going to get a discount on your normal monthly rate, to get that package. But then you're also get a 25% discount on top of that. And if you join today, of course, like I said, you'll get access to all these sessions that we've done weekly for the past 4 months now, I guess it is. So probably about 16 to 20 hours worth of content right there, in addition to all our regular educational content that we have. Like I said, guys, Tier 3, more content than you can absorb in a month. So join us there. We'd love to have you. I hope you guys have a great day. You trade safe. I will be back on Friday at 11 a.m. Central Standard Time as always. And, of course, at that time, we'll talk about all the markets. We'll look at the dollar. We'll look at Bitcoin. We'll look at gold and silver, oil. We'll take some chart requests and whatnot. We'll look at the stock market, all those fun things. Longer time together with you guys. But if you want all that information ahead of time, like I said, join us over here. We'd love to have you. Other than that, you guys have an amazing day. Thanks so much for joining in as always. Take care. Trade safe. Remember, the only thing you control in the market is how much you lose. So whether you come hang out with us in, at howtotradetowin.com or somebody else or whatever you do, just please make risk management the most important thing that you focus on. If you do that, it makes it a heck of a lot easier to make money, guys. All right? Take care.